Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to my podcast episode 157, published on July 25th, 2025, titled 12 Articles with Great ESG Stock Picks. Before I begin, I want to let you know that my next podcast will be on August 22nd, as I'm taking some time off. So, this podcast is presented by Investing for the Soul. Investingforthesoul.com is your go-to site for vital global, ethical and sustainable investing mentoring, news, commentary, information and resources. Remember that you can find a full transcript and links to content, including stock symbols and bonus material, on this episode's podcast page at investingforthesoul.com/podcasts. Also, a reminder, I do not evaluate any of the stocks or funds mentioned in these podcasts, and I don't receive any compensation from anyone covered in these podcasts. Furthermore, I will reveal any investments I have in the investments mentioned herein. Additionally, please visit this podcast's webpage for links to the articles and additional company and stock information. I have a great crop of 12 articles for you in this podcast. Note that some companies are mentioned more than once. I'm beginning this podcast with another of my favorite company rankings, whose annual list has just been released. It's the Humankind 100 ranking. Here is an overview of them from their website. The Humankind 100 celebrates the 100 U.S. public companies with the highest humankind values. We believe these companies consistently work to create large amounts of value, not just for their investors, but for humanity at large. The Humankind 100 companies are ranked based on humankind value, a proprietary metric that provides an estimate of the overall dollar amount a company creates for investors, consumers, employees, and society at large, and are therefore among the most ethical companies in the United States, according to our research. End quotes. The top 5 companies are Alphabet Inc., Eli Lilly and Company, Johnson & Johnson, AbbVie Inc., and Pfizer Inc. This second article features a sector favored by many ethical and sustainable investors. The article is titled Infrastructure Stocks to Consider. It's by MarketBeat and seen on marketbeat.com. Here are some quotes from the article. 1. NVIDIA Corporation provides graphics and compute and networking solutions in the United States, Taiwan, China, Hong Kong, and internationally. The graphics segment offers GeForce GPUs for gaming and PCs, the GeForce Now game streaming service and related infrastructure, and solutions for gaming platforms. Quadro NVIDIA RTX GPUs for enterprise workstation graphics, Virtual GPU or vGPU software for cloud-based visual and virtual computing, automotive platforms for infotainment systems, and Omniverse software for building and operating metaverse and 3D internet applications. 2. Coinbase Global Inc. provides financial infrastructure and technology for the crypto economy in the United States and internationally. The company offers the primary financial account in the crypto economy for consumers and a marketplace with a pool of liquidity for transacting in crypto assets for institutions. 3. Alphabet offers various products and platforms in the United States, Europe, the Middle East, Africa, the Asia Pacific, Canada, and Latin America. It operates through Google Services, Google Cloud, and other BETS segments. The Google Services segment provides products and services including ads, Android, Chrome, devices, Gmail, Google Drive, Google Maps, Google Photos, Google Play, Search, and YouTube. 4. Broadcom designs, develops, and supplies various semiconductor devices with a focus on complex digital and mixed signal complementary metal oxide semiconductor-based devices and analog 3-5 based products worldwide. 5. Oracle offers products and services that address enterprise information technology environments worldwide. Its Oracle Cloud Software as a service offering include various cloud software applications, including Oracle Fusion Cloud Enterprise Resource Planning, Oracle Fusion Cloud Enterprise Performance Management, Oracle Fusion Cloud Supply Chain and Manufacturing Management, Oracle Fusion Cloud Human Capital Management, Oracle Cerner Healthcare, Oracle Advertising, and NetSuite Application Suite, as well as Oracle Fusion Sales, Service, and Marketing." End quotes. Every investor knows that lithium is a basic mineral for electric batteries, so this next article will interest many investors. It's titled Best Lithium Mining Stocks 2025. Buy top mining stocks now. It's by Pharmanaut and found on pharmanaut.com. Here are some quotes by Pharmanaut on each of their picks. 1. Albemarle Corporation, headquartered in the USA, is the world's largest lithium producer, with operations spanning North America, South America, and Australia. Albemarle boasts diversified extraction and processing operations, including high-margin lithium brine and hard rock mining projects. Ongoing investments to expand production capacity in Nevada, Chile, and Australia. A resilient supply chain and ability to scale output to meet global demand. Strategic partnerships with leading EV battery makers. Strong commitment to sustainable mining and ESG practices. Albemarle's scale, geographic diversification, and innovation position it as one of the best performing mining stocks of 2025. 2. And I hope I can pronounce this right, Sociedad Química y Minera de Chile, or SQM for short, is South America's lithium market leader. Based in Santiago, Chile, SQM boasts some of the world's largest and lowest cost lithium brine operations situated in the renowned Lithium Triangle, that's Chile, Argentina, Bolivia. Now it has extensive lithium reserves and robust extraction technology delivering high efficiency. Geopolitical stability in Chile enjoys a relatively favorable mining regulatory environment compared to other regions. Cost-effective production enables SQM to remain highly profitable even as competition heats up. It has continuous expansion to satisfy increasing global lithium demand for EV batteries and storage solutions. Environmental sustainability programs making SQM attractive for ESG-focused investors. SQM competitive positioning ensures it remains a top choice in the best lithium mining stocks to buy for 2025. 3. Livent Corporation distinguishes itself by focusing on high-purity lithium chemicals for next-generation battery technologies. With operations in the United States, Argentina, and China, Livent stands out for supplying premium lithium hydroxide carbonate solutions for advanced battery manufacturers, strong partnerships with key players in the EV battery chain, including Tesla, expansion projects in Argentina and the US, boosting 2025 production capacity and flexibility, ESG and sustainability initiatives for responsible lithium extraction. Livent is uniquely positioned for specialty market growth, making it one of the best lithium mining stocks for investors eyeing niche applications and supply chain integration. 4. Piedmont Lithium. Though a smaller player, it has become a rising star by focusing on high-quality spodumene reserves in the United States, especially in North Carolina's Carolina tin spodumene belt. Piedmont brings strategic U.S. supply source, critical for domestic battery manufacturers and government-led supply chain diversification, fast-tracked expansion projects supported by U.S. regulatory incentives and EV adoption targets, and potential to benefit from blockchain-based traceability in mining, enhancing transparency for institutional investors, and growing interest from global automakers and battery companies seeking secure lithium supply. Piedmont's agility and domestic positioning could mean outsized growth as U.S. policy emphasizes onshoring critical battery mineral chains. End quotes. Now, like most investors, you probably are invested in AI stocks, either directly or via funds. Hence this next article, 5 artificial intelligence infrastructure stocks powering the next wave of innovations, should interest you. It's by Justin Pope and found on Fool.com. Here's some of what Mr. Pope says about his picks. 1. NVIDIA. The company has maintained its winning position as it progressed from its previous Hopper architecture to its current Blackwell chips, and expects to launch its next generation architecture with a CPU called Vera and a GPU called Rubin next year. Analysts expect NVIDIA's revenue to grow to $200 billion this year and $251 billion in 2026. 2 is Amazon. Web Services, AWS, has long been the world's leading cloud platform with about 30% of the cloud infrastructure market today. Through the cloud, companies can access and deploy AI agents, models, and other software throughout their businesses. 3. Microsoft. Its Azure is the world's second largest cloud platform with a market share of approximately 21%. Microsoft stands out from the pack for its deep ties with millions of corporate clients. 4. Arista Networks sells high-end networking switches and software that help accomplish this. the company has already thrived in this golden age of data centers with top clients including Microsoft and Meta Platforms, which happen to be also among the highest spenders on AI infrastructure. And 5. Broadcom, which specializes in designing semiconductors used for networking applications. For example, Arista Networks utilizes Broadcom's Tomahawk and Jericho silicon in the networking switches it builds for data centers. Broadcom's AI-related semiconductor sales increased by 46% year-over-year in the second quarter. End quotes. The final reviewed article for this podcast episode is titled Ethical Companies to Invest in 2025 and was written by the analyst team and seen on AskTraders.com. Now a few quotes from the article by the team. 1. Ecolab, a global leader in water hygiene and infection prevention solutions, presents a straightforward ethical narrative. Its products and services help businesses reduce water consumption, improve hygiene standards, and prevent infections, contributing directly to public health and environmental protection. Analyst ratings remain in line with current pricing, with Wells Fargo and Company reiterating a price target of $260 in May 2025. With Ecolab's stock price having gained 14% since the start of the year, the company has managed to outperform the market on the period whilst holding true to its ethical standing. While its dividend yield of approximately 1.1% is slightly higher than others on the list, its PE ratio of around 38 times indicates a similar valuation based on future earnings potential. 2. Microsoft presents a complex ethical profile. On one hand, its commitment to carbon neutrality, investments in renewable energy, and initiatives to bridge the digital divide are commendable. The stock's impressive 20% year-to-date return and a consensus analyst price target of $475 reflect market confidence in its financial stability and future growth, primarily driven by its cloud and AI segments, making it one to keep on short lists. While Microsoft offers a modest dividend yield of around 0.7%, its high PE ratio of approximately 36 times suggests a premium valuation reflecting its growth potential rather than a focus on immediate shareholder returns. The company's low debt-to-equity ratio underscores its financial strength, allowing it to invest heavily in research and development and pursue ambitious sustainability goals. And 3. United Natural Foods. Stock has pulled back around 15% this year, although remained firmly higher over the past 12 months, with a gain of more than 70%. The company, a leading distributor of natural, organic, and specialty foods, presents the most challenging investment case, with the recent cyber incident causing a sharp pullback in the stock. This could in fact be an opportunity. Unlike Microsoft and Ecolab, United Natural Foods does not offer a dividend, reflecting its current financial constraints. Its low PE ratio of around 8 times suggests a deeply discounted valuation, reflecting the market's skepticism about its turnaround prospects. Recent earnings on July 16th beat expectations, however, and the stock is on the move, with an 8% gain immediately off the back. End quotes. Now some more articles of interest from around the world for ethical and sustainable investors that I didn't have time to cover as in the above. The first one, title, Top 10 Wind Power Companies on EnergyDigital.com by Jasmine Jessen. 2. Title, Ethical Companies to Invest in 2025 on AskTraders.com by Analyst Team. 3. Title: The Green Gold Rush, Why Techem's $6.7 billion sale signals a buying opportunity on AIinvest.com by Wesley Park. 4. Title: AJ Bell adds Rathbone Ethical Bond to buy list on PortfolioAdvisor.com by Christian Mays. 5. Title: Procter & Gamble named top socially responsible dividend stock on AInvest.com by AInvest. 6. Title: 11 best halal dividend stocks to buy now on InsiderMonkey.com by Vada Gill. And 7. Title: JP Morgan picks 3 top stocks in alternative energy on heels of Trump's Big Beautiful Bill. And that's on Benzinga.com by Priya Nigam. These are my top news stories with their stock and fund tips for this podcast. 12 articles with great ESG stock picks. Please click the like and subscribe buttons wherever you download or listen to this podcast. That helps bring these podcasts to others like you. And please click the share buttons to share this podcast with your friends and family. Let's promote ethical and sustainable investing as a force for hope and prosperity in these deeply troubled times. Contact me if you have any questions. Thank you for listening. As I mentioned earlier, I'm taking some time off, so I'll talk to you next on August 22nd. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.